BitMEX's $1 billion sale collapses as buyers. Walkaway BitMEX's effort to sell itself has fallen apart. According to a report from Coin Bureau published on August 8, 2026, a sale process valued at roughly $1 billion collapsed after potential buyers walked away from the table. The exchange, one of the oldest derivatives venues in crypto, is left without a confirmed acquirer. The report names potential buyers that were in the mix before the process broke down. No final price was ever announced, and neither BitMEX nor any named party has confirmed a signed agreement. Treat the $1 billion figure as the sale ambition that was floated, not a closed transaction, a sale that never crossed the line. The gap between an exchange being for sale and an exchange being sold is where most of these stories live, and BitMEX is now sitting squarely in that gap. Buyers reviewing a derivatives platform are not just pricing a brand and a user base. They are pricing the regulatory history, the licensing footprint, the open interest on the books, and the liability that comes attached to a business that moves leverage positions for traders around the world. BitMEX carries a specific kind of baggage there. The exchange settled with U.S. authorities years ago over Anti-Money Laundering and Bank Secrecy Act failures, and its founders faced personal consequences. Any acquirer taking on the platform inherits that compliance story alongside the order book. When a buyer walks late in a process, it usually means the diligence turned up something the price no longer justified, or the strategic case thinned out as talks dragged on. Derivatives venues face a harder market. BitMEX helped invent the perpetual swap and once dominated crypto leverage trading. That position has eroded. Binance, OKX, and Bybit now command the bulk of derivatives volume, and newer venues keep chipping at the edges. A billion-dollar tag on a platform whose market share peaked years ago is a hard sell in a market where the biggest players already have the liquidity, the licenses, and the retail funnel. The wider derivatives picture is not standing still either. Bybit has been pushing a traditional finance product push and an EU licensing drive, and exchanges are racing to bolt equities, tokenized assets, and payment products onto their trading cores. Against that backdrop, a standalone derivatives exchange without a clear next act looks less like a prize and more like a fixer-upper. There's also the consolidation angle. The same week BitMEX's sale unraveled, Coin Bureau flagged separate reports of other crypto M&A talks cooling. Deals that looked plausible during the last bull run are getting repriced now that the froth is gone. As of August 8, 2026, Bitcoin trades around 64,949, up 0.6% on the day, with the Fear and Greed Index sitting at 40, neutral. This is not a market euphoria pricing acquisitions at a premium. The read for traders and users: for anyone with a balance or open positions on BitMEX, a failed sale is not by itself a distress signal. The exchange continues to operate, and no announcement points to insolvency or a wind down. A collapsed acquisition and a collapsing business are different things, and conflating them is how rumors start runs. That said, the episode is a reminder of counterparty risk on any custodial venue. Funds sitting on an exchange are an IOU from that exchange. When the platform behind that IOU is publicly shopping itself and cannot find a buyer, the prudent move is the same one that applies in calmer times. Do not hold more on any single exchange than you are willing to have frozen if that venue hits trouble. Traders who want to keep control of their assets between trades increasingly lean on self-custody options and on-chain rails rather than parking balances long-term on a centralized book. The other lesson is about headline numbers. A $1 billion sale reads like a done deal in a Chiron. It was not. Until a purchase agreement is signed and regulators sign off on a change of control, a valuation floated in a sale process is a starting bid, not a settlement.